Hey guys. You guys are all muted, so if you want to talk, you can unmute yourself. Hello. Feel free to show your video too if you want to. Adam, how are you?
Hi, I'm good. How are you doing?
Not bad. I like the artwork in the back.
Thank you. I'm back home now, back in the Bay Area.
Are you guys under complete lockdown there?
It's the same as San Diego, basically just groceries and the essentials, yeah, but
Apparently, the
yeah,
beach
it's
is
been just
essential.
boring.
Yeah.
What was that?
Apparently, going to the beach and going to party
Oh
on the beach.
yeah, no. It's crazy.
Yeah.
Let's
Just trying to
see.
survive over here.
Wait, so is the school closed? Like you can't even go to your office?
Yeah, so as of 11 a.m. on Friday, they aren't allowing us to be on campus at all.
Oh, geez.
Yeah. I think that was the governor's order. I'm not sure because the chancellor's been dealing with like all of the board of health and like different levels of government and stuff on figuring
Uh-huh.
out what the plan is. I think there's police officers on campus, obviously, and then there were, I think, some facilities people, but otherwise, and people taking care of the animals because apparently there's
Okay.
animals. But otherwise, yeah, nobody's on campus. And they said plan on not being able to access your sorry, chapstick, not being able to
No, it's
access
okay.
your office for like a good period of time, indefinitely.
But some good news, I just got into state today. I found out.
Congrats.
Thank you. It was crazy. I'm so excited.
Yeah.
But I mean, I don't even know like if class will even be in session by fall. So like, yeah, it's kind of bittersweet. But
I mean, I've been looking at weird charts and stuff and graphs. So I think the same thing because what they predict is like a lull in the summer and then fall again.
oh geez.
I don't
Okay.
know. I don't know. We'll see. I try to ignore it.
So have you heard from other people as far as like their Zoom? Like, are people able to connect and stuff like that? Are people able to like access Zoom?
I haven't had any issues. I just did my other class, and most of the class was in it. Um, and most students kind of kept their video off or had their video on when they were showing their face or wanted to talk.
Okay.
But yeah, I didn't have any connectivity issues. The only thing that I'm having issues with is that the download of the video is a little slow.
Okay.
So I'm recording
Let's
it
see.
and it's recording already. So it's just taking a little bit of time, but I heard from other people that if they did the cloud backup to record
Yeah.
it, they weren't even getting it that day. So
Oh
I decided
geez.
just to do it on my hard drive. So yeah, but it went well the first class, so we'll see.
Okay. Oh, that's good to hear.
My daughter definitely crashed part of it, as to be expected when you're working from home.
Yeah, yeah.
Um, but otherwise, yeah, no, it went pretty well because I have a whiteboard to do it, and I have a backup whiteboard, a real one that if I need to
Yeah,
use.
I was thinking like you write so much notes on the big board, so I was thinking like if you like got one of those for the house or something, yeah.
Oh, I've definitely thought of that. That's like the best thing, the like writing on the walls. You saw The
Yeah.
Accountant, right? The movie. He
Yeah.
totally does that.
Yeah.
Um, I was like, man, that feels like my brain right there. Uh, but no, I have a Surface Pro, so I can whiteboard it out. That's
Oh, that's cool. Okay.
yeah. I
That's
got it
handy.
for my online classes so I can make videos. And once I found that they had like the whiteboard technology, I was like, I need this. Hey, Jordan. You're all muted when you start, so if you want to ask a question, you just have to unmute yourself. Hey, Judy.
Hi,
How are you?
I'm good. How are you?
Good.
Are we just picking up where we left off?
Yeah.
Okay.
So I'll finish up chapter 6, start chapter 7, and then just answer any questions you guys have.
Okay.
If we need to go 2 hours, we'll go 2 hours. The last class I went about an hour and a half.
Oh, okay.
So
Got it.
just what you guys need. But last class we had some random music coming through, so it was kind of fun. I closed my windows this time because they're doing construction across the street.
Yeah. I feel like the videos are gonna pick up so much background sound. There's like what?
That's why I have the ability to mute everybody, and I have it set up so that when you come on, it's muted automatically. So then I just figured there would be background noise.
Yeah.
Oh. Yeah. Wade, you figured it out. I'm looking at your different pictures. I'm looking back.
Oh wow, there's a lot more people in here than I thought.
Yeah, if you do gallery view, you can kind of sort through people.
Oh, that's cool.
Yeah. So I'm going to rely on you guys to tell me if there's a message in chat for me, because when I move it to share screen, I actually can't see the chat. And I tried to add it on my phone and I was getting too much feedback. So that's why I can't do the chat portion.
Hmm.
You guys can play around in it. Courtney, are you okay?
She's muted.
What'd you say?
Okay. So my big screen just says Wade Parsons, but I can see everybody like up top.
Do the gallery view and it should show you who's talking in the big
Oh, okay, I see. That's why I was stuck on only, okay.
Yeah. And then you'll see who's talking. It'll be in green. Like it'll be a green box around them.
Okay.
I'll be sharing the my screen soon. So you'll see it along the side, I think. I'm not sure how you see the actual people when I'm sharing the screen, but I see people along the side.
And will it blow up? Like, will you be with the main screen?
I'll be on the top, like in the top corner, and then you'll see my what I'm working on.
Oh, okay, cool.
Yeah. Just like a whiteboard.
Hmm.
You guys are all prompt. Good job. Where else to be?
Yeah, no.
Trying to make a joke. Definitely something that most of us have never experienced in our lives.
It's a question.
Yeah.
The notes that you usually do on the whiteboard.
Yes.
How are we gonna get note or
Watch.
post it later?
Wait 1 second. I will show you. That's what you're gonna see.
Oh, okay.
I have a whiteboard.
Okay.
Yeah. And this is all going to be recorded, so you'll be able to see it again.
So I will be able to go find a link later, whatever it is, then skim those notes later.
Absolutely. Uh-oh.
That's pretty helpful, actually.
Yeah, so one of my students, I'd been looking to figure out like a whiteboard kind of thing a long time ago when I was trying to make videos for my online classes. And I was walking past a student in my class and I was like, what is this? What are you using to take notes? And he was like, oh, it's the Surface, like the Surface Pro by Microsoft. It has this notebook function and you can add tabs and just create new notes, and it's awesome. You can change the color of the pen, and it's really cool technology.
Was it expensive?
It wasn't really. It was like there's different versions of it. I think that the starting point was like 500.
It's not that bad. It's like
No.
yeah.
And I use it as my main laptop now. I like it a lot.
Someone asked if they could go to the bathroom.
Absolutely. Just leave your computer and your phone where it is. If you've seen the bloopers, like, yes, you could absolutely go to the bathroom. Oh,
Is this the page that you're going to start off on?
Yeah.
Okay.
Do you guys see the group chat when I pull it up, or do you just see the whiteboard?
It
Are we
comes
on
up in,
chapter 6?
What was that?
Are we on the chapter 6?
Yes.
it comes up in like a different tab.
Okay, so you don't see what I'm seeing in the middle of my screen. Okay, that's what I want to make sure. Okay, let's see. Cool. You guys good?
I'm just trying to copy this down.
Yeah, no worries. I hope you brought caffeine.
I didn't actually. Maybe that's a good move.
You can also do jumping jacks if you need to. Get some energy up.
Everyone stand up, get some energy.
Yeah, you can do it here anytime. You could like pace. Okay, it is 12:45, so I'll start. Okay, last for my financial class, I just started with where we left off. But if you guys want to start with any questions that you have from the homework or anything, would you prefer to start there? Anyone? So if you have a question, you can send it in the chat, or you can just unmute yourself. How do you access the slides on Canvas? There are no slides yet. I'll give you the slides after. So I'll post the chapter 6 slides after. The reason why I'm doing it that way is because a lot of the slides just have the answers and have the work that I usually show written out, and I want you guys to actually write it out. Other questions? I don't know how long we're going to be doing it online. The last email that we got from the chancellor was basically less hopeful of coming back on campus anytime soon than the previous ones. So this is our new mode.
How are we going to do tests? That was my kind of question.
Online. So I'll create the tests online. You'll have 2 attempts. I'll give you all of the information on it. You'll have a study session before. The tests will be due on Saturday night, like I do for my other online classes, so that you're you have time to study for them. So don't worry about that yet. We still have this chapter and the following chapter, and then a study session. It should be around the same time as the syllabus. So after spring break, it's probably not going to be as early as it was planned. Also, for the budgeting project, I'm trying to figure out an alternative because that whole chapter and what I usually do for that chapter is probably not going to work as well in an online format. So I'm trying to find something that's relevant and that you guys will be more interested in doing on your own. Does that make sense?
Mm-hmm.
Okay. Do you guys want to get started? Yeah? Okay. Last class, what we were talking about was cost behavior, right? So fixed costs, variable costs, and then mixed costs. And last class, we went over absorption versus variable costing. So we'll get into that in a little bit, see if you have any questions on that. But I didn't cover from chapter 6 the portion on mixed costs and how we actually determine what's the fixed portion, what's the variable portion of a mixed cost. So for cost behavior, remember that we're talking about some costs that are affected by changes in a volume. So number of units produced, number of units sold, miles driven, these things could influence some of our costs. Other costs are not changed by any changes in volume. So a fixed cost is going to be a cost that we have to cover regardless, right? We have to pay our rent each month, regardless of the number of sales that we have. We have to pay our insurance each month to have coverage for insurance. Those are fixed costs. Variable costs are those costs that are going to increase in direct proportion to increases in volume level. So we sell more units, our variable costs per unit are going to stay the same, but on a total, variable costs are going to increase in direct proportion to that increase in activity. A mixed cost is a cost that has a variable component as well as a fixed component. So at the beginning of the last class, we talked about that party, and we were going to throw a party for either 50 guests or 100 guests. Remember that? Kind of, sort of?
Waiting.
We had the rental cost for that party, which was a fixed cost, and then we had the meal costs, which were a variable cost. So a mixed cost was the total party cost. So I'm going to put this over on the y-axis.
So is this the mixed cost is in chapter 7, not 6, or
Chapter 6 is where we talk about mixed costs, and chapter 7 we look at purely fixed and variable costs.
Oh, okay.
So total party cost, remember, it's over here. That was a mixed cost because you have rental fee as well as meals. And then our activity level for this one on the x-axis. Oops, sorry, to take off the notepad. So activity level was going to be the number of guests at the party. With the variable costs, when we're looking at the graph, we always started down here, right? Because if you have 0 guests, there's no activity, then you're going to have no cost. But if we are talking about a mixed cost, we have an element that's fixed and an element that's variable in nature. So we don't actually start at the XY axis. We're actually going to start higher. So I'm going to highlight this portion right here. This portion is the fixed cost. right here is where we start. The minimum amount that we're going to pay is the rental cost, right? The fixed portion. We have to pay for the rent, regardless if we have one guest or if we have 100 guests. We're going to have to pay that. I think it was $500 for the rental of the facility, 400 or 500. From there, I'll highlight it a different color. Everything highlighted in pink is going to be our variable costs. So if we have 0 guests, right, we're going to still pay just the rental fee. That's going to be the total mixed cost. But as we have 1 guest, it's going to go up by that $10. So it'll be the rent plus the $10. We have 2 guests and so on and so forth. It's just going to keep increasing the total mixed cost. Over here, I think it was in geometry that you probably used the y equals a plus bx or y equals mx plus b, something like that, that equation.
The slope,
Remember
yeah.
hearing that? The mixed cost kind of might be familiar. Hey, Shane, you back? The mixed cost is going to use a similar type of equation. So the y in the equation is the total mixed cost. The f in the equation is the total fixed costs. The v in the equation is going to be our variable cost per unit. In this case, it's going to be per guest, right? And then the x is the activity level. Okay, so the reason why we have this is so we usually typically, if I'm a company, know what the total mixed cost is. So we can figure out our total mixed cost. We have that, but what we need for budgeting purposes, what we need for cost analysis purposes is to figure out what portion of a mixed cost is fixed and what portion of a mixed cost is variable. So then we can estimate at any level of activity how much our total mixed cost is going to be. In the party example, what we were looking at was how much it was going to cost total. So we were trying to figure out what the total mixed cost was. But in reality, what companies are usually trying to figure out is what portion of that mixed cost is fixed, what portion of that mixed cost is variable, so that we can figure out at any level of activity what the total cost will be. Does that kind of make sense? By the way, I muted everybody. So if you want to say anything, ask a question, let me know. Okay. So I see you all not smiling. Companies have a couple different options when they're trying to figure out the fixed and variable portion of a mixed cost. What you're going to learn in a later class, upper division class, is going to be least squares regression. That is not my specialty. I'm not going to get into it in this class. It's using a computer program to actually break up the fixed and variable portion. There's some quick and dirty ways of looking at it and just kind of saying, okay, this cost is more likely to be variable in nature. This cost is more likely to be fixed in nature, and just going with it that way. Another way is using a graphing method, but the way that I'm choosing to show you is the high-low method. I think this is a pretty easy method to kind of use, and it's pretty quick to figure out the fixed and variable portion using this method. So we're going to look at this example over here, and I will need my notes for this one. So we have information for 6 months worth of maintenance costs. So January to June maintenance costs. In D, the column D, we have hours of maintenance because this company believes that total maintenance cost. So this is the mixed cost. Total maintenance cost is being caused by maintenance hours consumed. So the maintenance hours equals our activity level. With the high-low method, we're finding 2 points of information: the highest level of activity and the lowest level of activity. Not the cost. We care more about the activity levels. So we're looking at column D first. And we're going to figure out in what month did the company have the highest level of activity, so the most maintenance hours, and in what month did the company have the least activity, so the least number of activity, the least number of maintenance hours. So what month did we have the highest level of activity? I muted you. What was that?
June has the highest level.
June. Yep. So June. And wait 1 second, I'm going to erase something. Sorry, I need a little bit more space. So in June, and then we have the activity. How many hours? 850. 850 hours. So make sure that you label that. And in June, what was the total maintenance cost?
9,800.
9,800. Also labeling that with the 9,800. For the lowest month of activity, what month did we have the lowest level of activity?
February.
February, yep. Okay. February, we only worked 450 maintenance hours. And in February, we only incurred $7,400 in maintenance costs. Okay, one thing that you're going to notice here is in mind the lowest does correspond with the lowest cost. The highest does correspond with the highest cost. That is typically true, but in your homework, you may see some anomalies. So make sure that you're focusing on the highs and the lows in the activity when you're selecting it. After you select those, the high and the low, what you're going to do is you're going to calculate those changes. So between the high and the low, what's the difference in activity level?
400.
Yep, 400 hours. And we're going to also calculate the change in cost between the high and the low. So 98 minus the 74 is 2,400. 400. Yep. I'll let you guys catch up with writing for a second. Okay, so step one was figuring out the high and the low levels of activity, right? And the associated costs. Step one also included calculating those changes. In step two, you'll be calculating the variable cost per unit, or the variable cost per hour in this case, using the difference between the high and the low that you calculated above. So this is important. You want to write this down because in this case, the number on top is going to be larger than the number below, but it's not always the case. So we're going to take our change in cost between the high and the low level of activity divided by the change in activity level between the high and the low. So remember that the variable cost per unit is constant. And that variable cost, the total variable cost, and the variable cost is being driven by that activity. So you're calculating a dollar amount per activity. In this case, it's per hour. So you want dollars on the top. The change between the high and the low is $2,400. And you're dividing that by the change in activity, 400 hours. Gil, I saw you. So you're calculating how much per hour the maintenance cost is for the variable portion. What did you calculate? What's $2,400 divided by 400 hours?
$6.
Thanks, $6 per hour. So having that variable portion is helpful. Now we know, and we can estimate total variable costs at any level of activity. It's great for budgeting purposes. It's great for forecasting. If we didn't have this information, it would be hard to calculate that. After you have that variable cost per unit, you're going to actually plug it back into the formula. And you use either the high or the low level of activity. Either way works and will come out roughly the same. And you're going to use that to figure out the fixed costs, the total fixed costs, F, in the equation. So I'm going to see. I'll use the low because I have it first thing on my notes. So remember, the Y is the mixed cost, the total mixed cost. So the total mixed cost is going to be 7,400. We already know that information. It's above. Equals F, we're solving for the fixed portion, plus the variable cost per unit is $6 per hour, right? Times how many hours did we use in maintenance costs for the low?
450.
450. So 450 hours. So here, when we're doing this calculation, this is the total variable costs, right? For this level of activity. The $6 per hour times the 450 hours. So you're going to first calculate that. So I'm just going to move it over here. 7,400 equals F plus, what's $6 per hour times 450 hours?
2,700.
Yeah, $2,700. So notice when we do that, we're eliminating those hours, left with dollars. Remember from algebra, we're just going to carry this over. So 7,400 minus 2,700 equals our fixed costs. So our total fixed costs are going to equal what?
4,700.
Yeah, 4,700. How do I know this is going to work for both levels of activity? You can check your work.
If you add them together, they should equal the total mixed cost, right? Or
Yeah, this 4,700 plus the 2,700, yeah, will equal the total mixed. The other way is to check using the high. So if you use the high initially, you would use the low. So you plug it back in, 9,800 equals F plus $6 per hour times 850 hours. And back, calculate it that way. Sorry. Ooh. So when you use the high, does it also come out to the 4,700? Yeah. So this is the 5,100. Ooh. Sorry, my writing is horrible right now. You don't have to do both levels. It's just a double check for you. If there was any rounding over here, if you, let's say that was 604 and you had to round to that 604, then you know that these are going to be slightly different when you're calculating using two different levels. Does that make sense?
Yeah, that makes sense.
Okay. Anybody have any questions at this point? Sorry, I'm looking at the chat right now. Okay, the last step is just writing out the equation for this mixed cost. So when we get into chapter 9, when we're into budgeting, this is what you're going to be given in cells. So for this particular cost, Y, the total mixed cost, equals 4,700 because that's our fixed cost, the total fixed cost, plus $6 per hour times X. So number of maintenance hours in this case. So I could say if I only have 100 maintenance hours, how much is my total maintenance cost going to be for this month? If I have 1,000 maintenance hours, how much will my total maintenance cost be? That's what this equation is giving us the answer to. If you're running a small business, you want this information. You need this information for planning. You need this for projections. You need this for establishing your sales price because you need to know the costs, right? So having this and breaking it into pieces and knowing what portion is variable, what portion is fixed is helpful. Do you see why I went through the other part of this class first in class? This one is a little bit more easy to understand, correct? Okay. In the slides and in the handout, there are some practice problems if you want to do them on your own and then ask questions next class. Does that work for you? Yeah. Before we move on to the next chapter, do you guys have any questions on, see, not that, sorry. Variable versus absorption costing. Do you want to go through another practice problem together?
Yes.
You want to do another practice problem? Yeah? Okay. This is in the handout that I gave you from last class. So it's variable versus absorption costing practice 2. This problem is harder than the initial practice problem that I walked you through in class. And you'll see from your homework problems that it's probably more in line with this problem than the one we went through in class. So, you guys ready or do you want to break? You guys, some of you can unmute if you want to.
I'm ready.
Okay.
I'm ready.
Shane, this class is quieter than financial, right?
Yeah, a lot quieter.
Making sure you're all here. Okay. It's the opposite. Usually you guys are the loud ones.
Well, I have a machine going off in the background, so it's pretty loud.
I can't hear it even when you're talking, so it's good. Okay. Do you want me to kind of run down what we did last class a little bit? Quickly?
Yes, please.
Okay.
Sure.
So the best thing to do for these types of problems where you're calculating the income statements for both methods is to calculate out that per unit cost first. So first things first, absorption costing. So we're calculating cost of goods sold under absorption costing per unit and then cost of goods sold under variable costing per unit. So absorption costing is what we use for external financial reporting. What's included as a product cost? Under absorption.
Direct materials,
Yep. Direct materials.
direct
Yep.
labor,
Direct labor.
and variable manufacturing overhead.
Variable portion of manufacturing overhead, and one more.
Fixed manufacturing overhead.
Yep, fixed manufacturing overhead. So over here, we can see that direct materials were 25 per unit. Direct labor is 15 per unit. Variable manufacturing overhead is 5 per unit. We know that selling and admin expenses are period costs, so we're going to ignore them for the moment. And then notice something about fixed manufacturing overhead. It's given to us as a total, not on a per unit basis. So with fixed manufacturing overhead, absorption costing considers this to be a product cost. So we're going to put it onto a per unit basis by taking the total fixed manufacturing overhead, 250,000. And we're going to divide that by what?
Amount of units sold
Close.
or
Number of units
sold or produced.
produced. Yeah. This is the only time we use number of units produced. So we're going to read down below, during its first year of operations, Walsh produced 50,000 units. So we're going to take the 250 divided by 50,000 units produced. This is going to give us amount per unit, right? Our fixed costs per unit for year one.
$5.
Yep, $5 per unit. So year one cost of goods sold per unit for absorption costing is going to be 25 plus a 15 plus a 5 plus a 5.
50.
Yeah, 50 bucks. I'll kind of like move this over here like that, separate. Okay, for variable costing. Variable costing is what we use for internal decision-making purposes. What does variable costing consider as product costs?
Direct materials, direct labor, and variable manufacturing overhead.
Yeah, direct materials, direct labor, and variable manufacturing overhead. There's only 3 costs that they consider to be variable in nature, and only those 3 costs are considered product costs under variable costing. So direct materials, $25, direct labor, $15, and then variable manufacturing overhead is $5. So I'll call that variable cost of goods sold for year 1. How much is my cost of goods sold per unit under variable costing?
45
$45.
per unit.
Yep, per unit. So this company is in its first year of production. So we know that the beginning inventory is 0 units. In year 1, they produced 50,000 units. And in year 1, they sold 40,000. So they produced more units than they sold in this year, right? The end of year 1, they have 10,000 units left. Okay. Do you guys want to try to do the income statement first, or do you want to do one together and then do year 2 alone?
One together.
Okay. So absorption costing, we're using the traditional income statement. So we're going to have sales revenue first. And even though you're doing your homework online and potentially your tests now online, you're definitely going to want to write out your steps on paper. So show your calculations. So sales revenue. The selling price for the company's product is $60 per unit. So $60 per unit selling price. Times. What am I multiplying that by?
40.
Number of units sold.
Number of units sold. So 40,000 units sold. So in year 1, how much was my sales?
$2,400,000.
Yeah, 2,400,000. If you need me to make it bigger, let me know. I'm going to separate this out. with a different color. So with the traditional income statement, we're going to show product costs separate from period costs. So we're going to subtract cost of goods sold next. And since we already calculated up above, it's going to be $50 per unit, right? Times what? How many units?
Times 40,000 units.
40,000 units sold. Typically, if you have an error, it's either that you miscalculated the per unit cost or you're using the wrong number of units in the income statement. So how much is my cost of goods sold for year one?
2 million.
2 million. Sales minus cost of goods sold gives me what subtotal?
Gross profit.
Yeah, gross profit or gross margin. So $400,000 was my gross profit. After gross profit, what am I subtracting? What's the last things that we subtract?
Administrative expenses, selling and administrative expenses.
Yep, so our operating expenses are our selling and admin expenses. Yep. So less operating expenses. So our period costs, right? And just if they give it to you separate, listed out separately. So we have variable, or sorry. Yeah, variable selling and admin first. At $2 per unit. Times what?
40,000.
Yeah, 40,000 units sold, correct. So total variable selling and admin costs were what?
80,000.
Yeah. And then we have fixed selling and admin costs of 80,000 as well. You add up these two amounts, 160,000 in total operating, in operating expenses. So year one, what's operating income?
160,000. Oh, never mind.
400 minus 160.
240.
Yeah, 240. Is some of that coming back to you?
Yes, ma'am.
Okay, good. In year one, you're going to do the same thing for variable costing. Do you guys want to try to do variable costing on your own for year one? Or do you want to do it together? Okay. Do year one for variable costing on your own. Take about 5 minutes or so. you want to keep going? Yes, no? I can't see you. Thank you. Okay, what was year one sales revenue for variable costing?
2,400,000.
So it's the same.
Yeah.
Okay. And the variable income statement, what am I going to subtract next?
Variable costs, within variable cost of goods sold, and variable selling and administration.
Yes, so we're going to separate our variable costs from our fixed costs. So variable costs first. So you have variable product costs, so variable cost of goods sold, which was how much per unit?
45.
$45 per unit times the number of units sold, 50,000 units sold. So how much did you calculate? Anyone?
$2,250,000.
So 1 million what?
45 times 50,000 is 2,250,000.
45 times 50 is what? Sorry. Is it 50,000 or is it 40,000?
Yeah, no.
40,000.
No, it's
Thank
40,000.
you.
Yeah. Okay.
Come on now. I need your help. 45 times 40 is what?
1,800,000.
There we go. And then you have your variable, what? Next.
Selling and admin.
Variable selling and admin. So can I just carry it over from the other one?
Yes.
Yeah. So 80,000. What are my total variable costs? What's 1.8 plus the 80? 1 million.
1,880,000.
2 million.
1,880,000.
Yeah.
When I subtract variable costs from sales, what do I calculate?
Contribution margin.
Contribution margin. And what's the contribution margin year one?
520,000.
520. So the excess of sales after subtracting those variable costs is 520. For fixed costs, that's what's next. How much in fixed costs did they have? So they have fixed manufacturing overhead and then fixed selling and admin. How much was fixed manufacturing overhead? What was that?
250,000.
250. And then fixed selling and admin was the 80. So we're going to take the total fixed cost, which was 250 plus the 80, 330. Yeah. 330, and we're going to subtract that from the contribution margin of 520 to get operating income of what?
190,000.
190. Is it correct? You think so? Can you check it? Which one's higher? I can't see your faces right now, by the way. And they're loose. I'm confused. Wait a second. I'm going back to the question. Sorry. Courtney, you're confused how it went to $60 per unit. Which part?
On the absorption income statement for the sales revenue.
Here? It's given.
Yeah, oh, I didn't see that up there.
Up at the top.
Gotcha.
Yep. Sorry about that. Okay, wait 1 second. For the $50 per unit, Kamiko, are you talking about the variable cost or the cost of goods sold? I can't hear you. Wait 1 second. Kamiko, can you hear me? Somehow I moved my picture away and I'm trying to figure out how to get back, so I apologize. I know. Thanks, Razul. Okay, wait 1 second. I'm going to turn off the sharing for a second. I want there. How do I switch it back? Uh-oh. I'm fumbling, sorry.
Never mind my chat.
Oh, you figured it out?
Yeah,
Okay.
I was behind.
Okay. Okay, how do I check it, guys? What? Anyone? Do you need a break?
I'm just trying to copy all this down.
I know. It's been a while. I wish it hadn't been so long. Wow, we have like almost everybody from the class here. That's amazing. Okay. So, how do I figure out the difference? Can we back into it in a way? Anybody remember what the key difference between the two methods was?
The inventory.
What? It's the treatment of one item. One of them treats something as a product cost, the other one treats it as a period cost.
Machine hours?
No. Haha. There we go. Thank you, Wade. So under absorption costing, we treat fixed manufacturing overhead as a product cost, right? Fixed manufacturing over is part of cost of goods sold. So when we produce those units, number of units produced, we're using that to calculate on a per unit basis the fixed overhead. So if we have any units still sitting in overhead, the part of that fixed overhead cost is not going to be expensed this year. It's going to be sitting as an asset in inventory under absorption costing versus variable costing, which is using and considers fixed overhead to be a period cost, not a product cost. So if I want to back into it, I can start with the variable operating income that we calculated, 190. And I'm going to add fixed overhead deferred in inventory. So fixed overhead per unit is $5 per unit. And inventory, if you look over here, went from 0 units in beginning inventory to 10,000 units in ending inventory. So it increased by 10,000 units. So of that $250,000 of total fixed overhead, 50,000 of it for absorption costing is still sitting in inventory as an asset. It wasn't expensed this period under absorption costing. So absorption costing operating income is the 190 plus the 50, the fixed overhead that's deferred, 240. Does that make sense? I can't see you. I'm sorry. So if you can't, I can't even see if you're confused because I cannot figure out where the camera is. I will eventually. There we go. There we go. Sorry. Okay. Does that kind of make sense? Is it coming back to you at all? Yes?
Yes.
Yeah, but I lost connection.
Bill's over there with a red cup. I don't know if you're participating in the USD challenge. Yes, I heard of that.
Where does the $5 per unit come from?
Sorry. Oh, up here. Where we took the fixed manufacturing overhead
Oh, I see.
divided by the number of units produced.
Okay.
So what I want you to do right now is do year 2. And I want you to write out your calculations because this is the one I want you to make the mistake now than when you're doing your homework. So I want you to do both absorption costing and variable costing for year 2. And I'm not going to tell you anything further right now, but you need to read through the information for year 2. So I'm going to make it a little bit bigger up here. Is that okay? So year 2, everything's the same, except for 2 pieces of information are different. In year 2, you produced only 40,000 units, and in year 2, you only sold 50,000, or I'm sorry, you sold 50,000. So it basically reversed. So year 2, you produced 40,000 units. In year 2, you sold 50,000.
We're doing the income statement, right?
Yeah, you're going to do the income statement. I don't want to give you too many hints right now because I kind of want you to make the mistake. Kaylee, I like the scenery in the background. Oliver, did you already do it? No? You guys ready? Or do you want a few minutes?
Yes.
Yes, you ready?
Give me like 1 more minute.
Okay, thank you.
I have a question
Yeah.
that I'm not sure if I'm giving it away. Since you decided to switch the units around for 40 and 50K, does the inventory in units, would that change because since you switched, then it'll be going on to the array column? Or I'm not sure that makes sense. Let's see.
Yeah, so over here you would have 40,000.
And it'll be debit 10K. If I'm trying to remember my credit and debit.
Left. So 40,000 would be produced in year 2. 50,000 would be sold in year 2. Did I explain it, Leah?
Yeah. So would that change? Would that change of how the income statement? Because since you switched the units around, the 10K will be on sold.
The 10,000 won't be shown in the income statement.
No?
This 50,000 would be. You'll see the 10,000 somewhere. So at
Because
the
I'm kind of wondering, like, where does that go then? Because oh, is it the closing?
How about I show you?
Okay.
Okay. So going back here. Can you hear my daughter screaming outside? Sorry.
Yeah, I know that.
Sorry.
Oh, your daughter's
Closed and she's still that loud. So, in year 2,
first things first, I'm going to go back up here and make it bigger. Year 2, we produced 40,000 units, sold 40,000 units. Under absorption costing is the unit product cost still $5. I'm sorry, $50 per unit in year 2.
No.
No, that is correct. So under absorption costing, we have to recalculate the product cost per unit. So absorption, year 2, cost of goods sold per unit for those units that we produced in year 2. So in year 2, how do we have the same direct material cost?
Yes.
Yes, still $25. Because remember, those true variable costs are going to be consistent per unit. Direct labor, is that the same?
Yes.
15, still the same. Variable overhead, is that the same?
Yes.
Yes, $5. For fixed overhead, is that going to be the same per unit?
Yes.
No.
What? Wait.
So remember the fixed overhead. So this is for year 1. Remember, fixed overhead is based on production. If you change the number of units that you produce, then that's going to change the fixed overhead cost on a per unit basis because it's a fixed cost. So it is not consistent on a per unit basis like variable costs are. So total fixed overhead divided by number of units produced for year 2. Still 250,000 in total cost for fixed overhead. But production changed in year 2. We only produced 40,000 units. So what happens to our fixed cost on a per unit basis for those 40,000 units? The cost per unit is going to increase because we produced less units. So what is the cost per unit in year 2 for fixed overhead?
625.
Yeah.
Oh.
$625 per unit for year 2.
Oh. Oops.
I wanted you guys to make that first mistake.
That's not fair. Just kidding.
Then you won't make it on the homework. That's why I did it.
Oh.
Because if you remember it and cross it out, so you remember. So
I have a question. Wouldn't you prefer to do round to the nearest dollar then? Because since there's a 25.
no, because don't think of it. Don't round it to the nearest dollar. It'll mess up your calculation. Round it to the nearest penny.
Sorry. The reason why I asked this is because for most assignments, it usually asks for like around to the nearest dollar or the 10 cents.
This one's going to ask you to round it to the nearest penny. This one will be the nearest penny. Just follow, because it'll tell you what rounding, follow the rounding, but it should ask you to follow to the nearest penny.
In the assignment?
Yeah.
For the hard copy or the Pearson?
Pearson for this particular assignment, yeah. So most of the time it's fine to round to the nearest whole dollar, but for this particular assignment, you're going to want it to the penny. So now is my cost per unit 50 or is it 51.25?
51.25.
51.25 per unit produced. Okay. For variable costing for year 2, do I have to rewrite it all out? Or is it the same?
Not a whole lot, but some.
Wait, I'm talking about per unit. Is
It's the same, right?
It's the same.
Yeah.
The cost per unit for variable costing is the same. And it always will be because variable.
Oh, yeah. It's the same.
Unless there was an outside source that changed the variable cost, because that is possible.
For variables?
Yeah, unless something outside changed the outside cost of the variable cost per unit, it's always going to be consistent.
So what is the extra unit, or you don't want to go through that more detail?
I'm going into it next.
Oh, I can jump to the gun.
Yeah. Okay, so going back here. Don't jump ahead. Don't correct your work yet. Actually, I'm going to do it over to the right so you can see it. Sorry. For year 2 for sales, I don't think you probably had any issues with calculating that for absorption. So you have sales revenue, right?
Yes.
And what was the amount? Sales revenue was how much per unit?
51.25.
No, the sales.
60 per unit.
Yeah, $60 per unit times what?
Times
50,000
50,000 units sold.
Here's my daughter. She's saying hi.
Oh, hello.
Okay. Uh-oh. And she's leaving. I knew this was going to happen. I'm sorry.
It's okay. I mean, children will always have energy and they'll always bring brightness to the world.
You might scream soon. She's leaving the room.
Oh. She wants to be a professor too.
Maybe.
How old is she?
3.5.
Cute.
And she has a lot of energy. Okay. So, and she misses people. So that's partially probably why she's trying to drop in.
Oh.
Okay. How many units did we sell in year 2?
50.
So 50,000.
Thanks. Sorry. I think you guys already said that, but I got distracted.
No worries.
Okay. So year 2, what was my sales revenue?
3 million.
3 million. Okay. Now, I'm going to write it a little bit different than I did last time. Less cost of goods sold, right? But I can't just write one line. I can't do one calculation for cost of goods sold for absorption costing.
Is it because there's 2 different years of production and the previous years affects it? The 10,000 that was in inventory previously?
Correct. And also because we had a change in production in the number of units produced. So if I was consistent, I produced 50,000 last year and I produced 50,000 this year. Do you hear all this commotion? Sorry. So my daughter has been battling it out with my husband over the past few days.
Like a tug of war?
Oh, like being very bratty to him.
Like, what is the worst thing she done?
You just shut the door in the other room.
Yeah, she just wants mommy and or they just battle it out. It's pretty
Well,
fun.
you know, kids prefer mothers over fathers because of the bond.
Back and forth. They figure out what they want. But okay, sorry about that. Anyway, so because we produced a different number of units in those 2 years, it influenced the cost per unit, right? Under absorption. So for 10,000 of those units, we produced them last year, right? So 10,000 of those units are going to be at the $50 per unit cost. The product cost for year 1. Because they were sitting in inventory, now they're sold, so they're at that old inventory cost. Remember that FIFO, LIFO average cost thing? So in year 1, or for that year 1 production, how much were those costs? What's
For some
10,000
reason,
and
the
10?
like your microphone's like suddenly like do like a hard rock vocal.
Wait 1 second. Can you hear it?
I mean,
Yeah, no.
I can hear you just fine. Just that moment.
Oh, sorry.
Yeah, it went
It
back.
just went really loud.
Oh. I think it's because there's like thousands of people using, or millions of people probably using Zoom right now. Okay, so 500,000.
Like for Zoom, like is it like connected to all the classes in the community college? Well,
A
like
lot of people are using it. A
I
lot.
thought it was like just a group by alone, like by itself.
It is, but it's on the server. Okay, I don't know all the technological issues, but I know it's part of that. Sorry.
So the for the cost of goods sold, so since we're doing it in year 2, so we can bring from what is previously like the year 1.
Because we have 10,000 left over from year 1 that we're now selling. So 10,000 of those units that we sell in year 2 were produced in year 1, so we're expensing them now here. And then 40,000 were produced in year 2 that we're going to expense here too. And they're at 2 different cost bases.
So with that, is that how it canceled out then?
Yeah.
Oh, okay.
So if you had done both of these at 50,000 or $50 per unit, the cost isn't going to come out correctly because you're not accounting for the entire fixed overhead cost. If you'd done both of them at 51.25, it still wouldn't come out correctly because some of those units were at a different price level than the others.
Right, because the first unit sold, I think so. Yeah, the sold. It turned out to be 51st, but then the second year it'll be it changed because you decided to change the. Sorry, my husband's coughing. He doesn't have the illness, I promise you.
We're all safe.
Yeah, sorry about that. Yeah, so like since you change the unit, it won't be 50. It'd just be $1.25 more.
Yeah.
But would it be but would the total will be the same since you decided to switch it?
Yes. So if you look here, we're still expensing 50,000 units. 10,000 were produced in year 1, 40,000 produced in year 2.
On the T account?
I don't care about the T account. I'm just showing you the change in the units.
Oh, I was just trying to find where you wanted to look at.
No, I'm talking about in the income statement. You're still expensing the same number of units as you're selling. It's just that one has 10,000 of those have a cost basis from last year because they were produced last year. 40,000 were produced this year, so it's at the cost basis this year, 51.25. So how much for those 40,000 that were produced this year? What's the cost there?
$1,050,000
What was that?
or 40,000 units times the 51.25 per unit.
Yeah.
Would that be 2,050,000?
2,050,000.
Correct.
Yeah. Just too many zeros.
So total cost of goods sold would be the 2,550,000, correct? If you're going to make a mistake, this is going to be where it's going to happen. It's either in the per unit cost that you're calculating or the cost of goods sold portion. So if you're doing your homework and you have a mistake in that, check those units, check the cost per unit. And then the rest of it should be pretty easy for you. So then you calculate gross profit, right? Gross profit would have been the 450. Then you're going to subtract your operating expenses, variable selling and admin, and then fixed selling and admin. For variable selling and admin, you have to calculate it again.
2 times 50,000 sold.
Wait 1 second. I'm so sorry. I have to answer my husband. I already returned it. No, I already returned it. Just tell them that was a mistake. Sorry.
No worries. At least for me.
And my dog. I said no. They tell him that I don't have a return. No. Okay. So for variable selling and admin, how much per unit are we expensing?
Per unit.
Same, $2 per unit. That didn't change. You're just going to multiply it this time times how many units?
50,000.
50,000. Yeah. So $100,000 total.
Mm-hmm.
And then fixed selling and admin is 80,000. And 180,000 in total operating expenses. I am so sorry.
For what?
My daughter is screaming. My dog is barking.
I mean, it's natural. I mean, we all used to do that.
Okay.
For some reason.
For operating income, what's 450 minus 180?
270,000.
270. Thanks, Nathan. Okay. For variable, I think I can just write it out a lot faster. Is that okay?
Yeah.
Sure.
Okay. I'm gonna mute you. Please mute. Okay. Sorry if it's going slow, guys. For variable costing, obviously sales revenue is still 3 million. For the variable costs, for variable cost of goods sold, do I have to do two separate calculations?
No, because the variable cost per unit is the same for both years.
Correct. And this is why this is ideal for internal decision-making purposes, because variable costing is only using the true variable product costs as product costs. So it's $45 per unit. It's consistent times 50,000 units sold, right? I'm just going to erase this and move it over.
I'm not sure if this is possible, but what if somehow the variable changes like on the second year somehow?
Oh, if it changes in the second year, then obviously those would change. And it would be the same kind of situation that you had for absorption costing. So if any of your costs change, then obviously that production in year 2 is going to be different. But usually in the examples that you're going to be looking through, it's not going to be.
But why is that? Like, why would it change on the second year if that were to happen?
So is there a product that you like to buy every time you go to Target?
I haven't been to Target in a long time, but if I were to go
Costco or Ralph's or a grocery store, is there a product that you always buy?
I would
Wheels.
probably be go to the Asian market to keep on buying like coconut soy milk.
Okay, so anyways, if there's a product, does it sometimes go on sale?
Sometimes.
Does it sometimes go up in price? That's why it can change. It's an outside source that's changing the price. So vendors do the same thing. They just update their pricing. So we have to adjust our model too.
So is the reason why it will increase, it just depends like on demands?
Sometimes there's a lot. So that we're not going to get into that right now.
Okay.
Okay. So variable cost goods sold was 2,250,000, correct?
Do we sell 40,000 this year?
50,000 this year.
Oh.
Variable selling and admin was $2 per unit times 50,000 sold. So 100,000. So we're gonna subtract 2,350,000 from the 3 million, right? To get contribution margin. And contribution margin is 650. Fixed expenses are exactly the same as last period. So fixed overhead was 250. Fixed selling and admin was 80. So 330 is subtracted from the 650 to get operating income of what? $20.
Okay.
When you compare the 320 to the 270, what's the dollar difference?
50,000.
50,000. So it's exactly the same. It's the fixed overhead was released now. Instead of sitting in inventory, it's expense now under absorption costing. Let me see if there's questions. Brad, thank you. Toilet paper, yes. I don't know if it's gone up in price or not.
Can you go over how you backtrack into checking your work?
What was that?
Can you go over in backtracking to make sure that that's the correct figure?
Which one? Oh, me. Oh, yeah. No problem. For year 2?
Just so I can kind of get it backtrack.
Okay. I wasn't sure if people are still paying attention, so thank you. Okay. For year 2, you can start with the same thing, variable costing, right? Variable operating income. Of 320. In year 2, what happened to inventory? You started with 10,000 units at the beginning of year 2. And then you went down to what? You produced 40,000, you sold 50.
0.
Yeah, 0 units. So you have a decrease in, you have a decrease in inventory, correct? 10,000.
Correct.
So we're going to subtract the fixed overhead that's released from inventory. It's no longer an asset. It's now going to be expensed. And the amount of inventory that's released is at the cost basis from last year. Because those units that were released here in year 2 to get to 0 units, we're at $50 per unit and a fixed overhead cost of $5 per unit. It's not at the year 2 cost because all the units that we produced in year 2 were sold in the same year. It's at year 1's cost because all of the units produced in year 1 were not sold then. So $5 per unit times 10,000 unit decrease in inventory. So 50,000 is subtracted to back into absorption operating income. 270.
Thank you.
Yeah. Okay. Does this make more sense? I know this one was harder. Yes?
Yeah, it makes more sense.
Yeah. When backing in, does it always go from variable to absorption?
Sorry, who is that?
This is Nathan.
Hi, Nathan. So when backing in, yeah, I do it from variable to absorption. You can do it the opposite direction, but it makes more sense to go from variable to absorption because you're either adding or subtracting depending. Because if it's released, it's subtracting. It would have makes sense to add it.
Okay.
Yeah.
Thank you.
No problem. It always has to do with the fixed overhead cost and the number of units change. Other questions? So I could move on to chapter, what is it, 7, if you want me to, or I can answer questions that you guys have for homework or anything you have questions on, or we can leave. It's up to you.
So when is the?
You are not gonna drop the class, Guillermo. You're not funny. You're not.
Not this class, but another one.
Oh God, don't do that. You're just the deadline. Yeah, as long as it's not a short class, you do have time. I think it's April is when it's like 80, once 80% I think is gone by for W.
You know if they're still gonna do accelerated classes for the middle of the semester?
They are. They, I don't think that they pushed it back. I know that they didn't push the end date for the original 8 weeks back, but I didn't see if, I think it's staying at the same period of time.
So I was just curious too, if we signed up originally for a on-campus class and because we were forced to go online, is there like a, for people that want to drop, do they get penalized or can they just drop it without being penalized?
Is it an 8-week class?
No, it's 16-week.
I do not know the answer to that question. I think that at this point in time, usually, typically in a normal semester, you can't drop late. You would
I
have
know,
to
but due to the circumstances, obviously we signed up for a on-campus class, right? You know what I mean?
Yeah.
And it's an inconvenience for some people to do online, and it wasn't our fault, right? It was like a natural thing that happened. You know what I'm
Are
saying?
you talking about for my class, Kelvin?
No. Just a general question. Just a general question.
Honestly, I don't know the answer to that. I haven't seen any information on that either. I've given you guys everything that I have. I would talk, I know people are working. I think admissions would probably be the one that you would want to talk to, and maybe counseling.
Okay.
They would have more information on that than I would.
Your class, by the way.
Someone mentioned about the parking ticket that they
Sounds like it's available at this time.
Wait. Too many people talking at once. What was that? What'd you say at the very end?
Who?
Kelvin.
Oh no, I was just saying I'm not dropping my class at all.
Okay. I know most of you guys are trying to get out of here, so you need this class.
Since it extended 1 week, the final day will be extended 1 week more too.
Okay, sorry. No. Our ending date will just end on June 1st. We're not going to push it into summer.
Are they still doing spring break, or was last week considered that?
Oh my gosh, yes. Thank you for asking these questions. I'm sorry. So we will still have spring break next week. Basically, last week, a lot of faculty were pushing back against going online, and basically the only other option is to cancel classes. And so in order to kind of accommodate faculty needs, they decided to put classes on pause last week, including online classes, which frustrated me because mine are very organized to keep people from getting too overwhelmed. But anyways, the reason why they did that was kind of to give faculty time to convert to online and distance ed, because there was a lot of disciplines like sciences and culinary that don't have any online teaching experience.
Gotcha.
So
Okay.
yeah, it is a 16-week semester. We're still ending on June 1st. Last week, you just didn't have class, and all assignments last week were not supposed to be due. So what I did was I didn't change the due dates because I'm sorry, I'm lazy and I have to roll this forward for another semester. And I knew that if I changed any due dates, I would forget later on. So all of your due dates are pushed back in my class.
Till the end of the semester?
We're done. Just wait a second. I'm not done with my statement. We are done with chapter 6. So your chapter 6 homework's due this weekend. Chapter 7, we're going to start next class. So the pre-assignment's due tomorrow night. I am allowing you all to go back and do any assignments that are past due. If you miss an assignment, I get it. A lot of people are dealing with individuals at home, or they're going to become sick themselves. So I get it. If you have other things and you're going to miss an assignment, just make it up at a later point when you're feeling better. Does that make sense?
Yeah.
Okay. The exam will probably be around the same time as it's planned for in the syllabus, but it'll be due on a Saturday. So we'll still have a study session in class, over Zoom in class. And then you'll have that to prepare for the exam.
Do you know what happened with like labs?
Yeah, your lab classes should still have labs online. If there's going to be a class that's going to go back on campus, I don't know. If there are classes that are going to go back on campus at some point, it's more likely than not to be the lab classes. But at this point in time, based on the chancellor's last communication to us, it doesn't look like we're going back in the classroom anytime soon.
Okay.
So
The part that you said we're supposed to come back after 2 weeks or something like that?
No, I didn't. There was never that communication for me.
Or that's probably my other class, because she was having high hopes that after 2 weeks we'll come back.
It's not gonna happen.
It's not going to happen. If you've watched the news, if you know what's going on, we're
not going back. Yeah.
We're not going back sooner. Rather, it's going to be later, if anything.
It's gonna be a while. Yeah.
Yeah. It's gotten worse, not better. But next week is spring break. So basically you have class this week, then you have spring break. So you have a week to catch up if you have anything that you're behind in.
So
Spring
for
break
our,
still applies.
What was that?
Spring break still applies.
Yeah, spring break still applies. So you essentially got 2 weeks off.
Woo!
It's just really
Yeah.
confusing because you have a week in between where you're doing class. Sorry.
When does spring break start?
Next
Next-
Is
week.
it a new date?
Yeah,
Huh.
When?
Okay.
next Monday.
Okay.
Oh. Okay.
Judy, don't write that to everybody. That's what I was hoping that wouldn't go around the classroom like it does usually in the spring. Just wrote that the SDSU put out their admission status. I know, it's exciting, but it's usually distracting. Sorry.
so for our exam number 2, it's going to be still on the same as the syllabus, but it'll just be due on the Saturday, which is the 11th. You said.
Yeah. Or I'm not going to confirm that at this point, but it will be due on a Saturday. So it'll be either the 11th or the 18th then. I'll tell you closer to it.
All right. Thank you.
Yeah.
I'm pretty sure
Okay.
you're
Thank
gonna
you.
do this in class. For the exam, is it possible that people could do it before Saturday?
Yeah. You'll be able to access it before.
Oh, so it'd be
Okay.
similar like last semester, but financial.
Yes. Correct.
Okay.
Okay.
Okay. Any other questions? How are you guys doing? Are you okay?
Mm-hmm.
Physically?
Really bored.
Did you do something
Yeah, we're just
like
bored.
few minutes class start? Because I was trying to figure out how does Zoom work because this is the first time I've ever done this. Did you start what did you start in the class? Because I saw something you were talking about, but I missed it. And I was trying to like, okay, what are we doing right now? It was like 2 minutes after 45 minutes. 45. 12:45.
Yeah. Oh, you can see. I'm gonna upload the video so you can review it.
Oh, you're recording?
Yes, I am.
Oh no, I'm so sorry, guys.
I
Okay.
have a question. That's exactly what I was gonna ask.
I have it set as recorded. Oh, it is recording. Yep, for sure. So as long as everybody's okay with that, I'm going to post the recording in our class only. Hi, Stella's friend.
Can you fast forward in the recording?
Question.
Oh, you can fast forward. You can do that. Apparently because there's such demand for Zoom right now, it's not auto captioning. So I apologize for that. If you need captioning, I will go and do it, but it's going to take me a very long time to caption a 2-hour recording.
Oh.
Dang.
So just let me know.
Would you be uploading the file?
Actually, I will. You have my blessing to repost this on public.
Thanks.
I have a question.
no microphone.
Thank you.
What was that? Who has a question? Sorry,
I have
Kamiko?
a question.
Yeah.
So would you be uploading like the handout that you used to giving us in the class like this in a module during a break so that we can print out ahead of time before the class starts?
Yes, I will. This class, just because you already had that, I didn't have to, but I'll post it.
Okay.
Yeah. And I'm going to post the PowerPoints too, so you'll have those.
Professor,
Yes.
would you happen to know if public libraries or the library at school is still open so that we can print there?
It's not.
Okay, gotcha.
Nobody's allowed. We're not even allowed to go to our office.
Wait, we don't need to
Okay.
print anything though, right?
No, you don't need to print anything. No.
No,
So, you can pull it up in Word
okay.
instead. Yeah, if that's what you prefer. But more than likely, I'm going to have you guys practice outside of class more than inside of class. Just today, because we had already done it. That's why I did it. But if there's a practice problem, I'll probably have you do it outside of class, and then we'll check over after or during the next session, if that makes sense.
Okay.
Just because the format's a little bit different. Wait. Send me private ones and I end the recording and answer you. So Joel, you can send me that in email if you wouldn't mind. Okay. Any other questions?
All good.
Did you guys see all the resources? Make sure you're checking my Twitter and announcements if you need resources. There are a ton. Leah, did you send me a file?
Say that again.
I'm not going to open the file. You can send it in an email to me. Because as soon as I end this.
Wait, for what?
Never
Oh, the question?
It's okay. Okay, do you guys have any other questions?
I think Wade had a question in that chat.
Wade, what's up? What's your question? I'm going to unmute you. Can you hear me?
He says he has no mic.
He says he has no mic. I can read it out.
Can somebody read it for me?
The question is, will there be an exam problem that starts from Chapter 4 costing and walks through Chapter 6, both income statements, and then Chapter 7 analysis, all under one problem?
No.
Okay.
Yeah. Yeah, no. Chapter 4 will be separate from Chapter 6. Chapter 6 will be separate from Chapter 7. Chapter 6 and 7, you'll see some overlap. But Chapter 7 is more analysis and using the income statement and the variable costing kind of information to manipulate things and see what happens, like an if-when kind of scenario. I like Chapter 7 a lot.
So there is 3 different chapters in one exam, right?
Correct.
Because I remember you mentioned about Chapter 9, and I'm like, so
That's later. So a lot of the information that you're using in this chapter or learning in this chapter, more in depth, you're going to use it in Chapter 9 too, because Chapter 9 is budgeting.
Oh, okay, that explains. Okay, that clears everything.
This class is harder to see the overlap in the topics because there are different topics. But in the next several chapters, we're going to be using the stuff from the chapter. Okay. Are you guys okay?
Yeah.
Yeah? You survived your first. Thank you.
Thank you.
It'll only get better.
Thank you.
Okay.
Okay.
Also, okay, worst case scenario, if I do get sick, I am posting and finding new videos for you, okay?
Okay.
But and not to get sick, and so I'll be here with you twice a week.
All right.
Okay?
Yeah.
So, have
Thank
a
you.
good Monday.
Okay, bye.
Hey, where do we get the recorded copy of?
I'll post it as an announcement. If you have any questions, you can hang on and I can answer them right now.
I missed the first half hour. I couldn't figure out.
Oh, no worries. Richard, did you see, I don't know, Erica contacted me.
Yeah, yeah. Cool.
Let me know if you need anything beforehand before like the Zoom sessions too, okay?
You have a light. You have a life you can give me?
A light?
Life joke. L-I-F-E. It's a joke. It's a joke.
I got it.
Hey, it's a joke.
I feel like everyone needs one right now.
Gosh.
How does this Zoom work?
Exit?
Where?
I think
leave at the top corner.
Or leave.
Meeting.
It's at the bottom.
Yeah, it's at the bottom.
It's red.
Bottom right corner.
Mine's at the very top right now.
Right corner. But that's the arrow.
It should say leave.
You could do a.
Yeah, should be at like the bottom right hand corner.
Whoa.
It should say leave.
W.
Oh, hello, classmates. Oh, whoa. Okay. Hi. Oh, somehow there's a. Hey. Oh no. What did I do?
You're okay. Just push the leave.
Is it the stop video or?
Where?
Desktop video should work.
Opposite end.
Oh no, that's just like okay.
The bottom right corner should say leave.
It should be the opposite corner here.
Opposite. Okay.
Yeah, bottom right.
No, wait. Oh. Okay, what did I do?
Oliver, I like those like lights you have in the back.
Who?
Oh,
Like
Snickers.
lights on your wall.
Oh. Christmas lights, yeah.
Yeah, I like it. I told my husband we have to put our Christmas lights up again.
Oh, we have them here year round. It's
I love
saves
it.
on electricity. Thank you.
Oh, I didn't know Was that me again? Sorry.
No.
Okay.
Do you want to turn?
Okay, who else?
I said to leave. There's a leave meeting button.
Wait,
Yeah,
I love
that.
that comment.
That's
Thank
it.
you.
That's that.
I felt the same. Okay. You guys have other questions?
Oh no,
I have a question.
What's up, Jordan?
What about the honors program? If I can't do like a
Still, I think that you're still considered in honors. It said that they told us that we just have to like kind of amend what you're doing.
Yeah.
So were you doing the informational interviews?
Yeah.
You're just going to do them over, you're going to try to set up Zoom sessions with people.
Okay.
They should be open to it. And also busy season was just moved from April 15th all the way through July 15th. So accountants are actually available to talk to you.
Ooh.
Yeah.
Okay. Yeah, I can math.
So yeah, you're fine. And just for me, all you have to do is check in with me in email.
Yeah.
It's fine.
Yeah. Okay.
But
All right.
you should be good.
Yeah.
Thank
Thank you.
Yeah, no problem.
All right, thanks, Professor, for this
No
class.
problem.
It's good to see people again.
Right? It helps.
All right, have a good day, guys.
You too. See you later. Bye.
Stop video.
Anybody else have any questions? Joel, I saw your questions. I don't know if he has unmute. I'm gonna end it if you guys don't have any.
This way. So, for example, I'm taking. I'm sorry. It's just that I don't know how to use this thing Zoom. So I'm taking, for example, EBIT, which is earnings before interest and tax, right? Net capital assets plus fixed assets. So, for example, fixed assets would be like property, plant, and equipment.
Yep.
Tangible assets, right?
Well, you're trying to get long-term assets. Wait 1 second. I'm gonna stop recording it.